Recording. All right, welcome everyone. This is the Next Level Firms Group Q&A Call, March 16th, 2017. Andrew Argue here. And for anybody that's new this week, typically how these calls go is we'll do any program updates at the beginning, and then after that we will go into Q&A. And so for today, I don't have any program announcements right at this very moment, but I'm going to try to get one out before the end of the week, and I'll post that in the Facebook group, so you'll see that. And so for now, and it's just some major updates to the materials, to the group and the community, kind of the direction that we're going, the training and the coaching, and how we're kind of be managing everything going forward. All good things. And so we'll get something posted about that here later on today or tomorrow. And so let's just jump right into Q&A. And so for anybody that has a question, you could just say in the chat, I have a question. Or you can, if you want to be unmuted, you just say I have a question. Or if you're in a place where it's really loud, like a Starbucks or something, then you can, just ask your question right in the chat. And Christina says, what's the number to call in with my phone? If you go to the audio section, Christina, I think in the audio section, if you click phone call, then it should give you a number there. That should work. All right, so let's get started. Who has questions for today? Just let me know in the chat and we'll kick this thing off. Uh-oh, everybody's silent today. Is everybody just beaten down with the 3:15 deadline? Hang on, we've got a... Sounds like someone's like in an airport. Okay. Doug says, any other social media lead generation you recommend in addition to LinkedIn, but when we're not ready to pay for Facebook ads? So the key here, man, is like one of the things I've learned about marketing, and I talk about this when we do live events. One of the things I've learned about marketing. So if you think about direct mail, cold calling, LinkedIn, Facebook, blogging, SEO, PR, YouTube, podcasts. You could just go on and on with this crap. It could go on forever and ever and ever and ever and ever. But what I've figured out, because I've tried almost all of these things, really, just like trying to figure out what the heck's going on. And what I've found is that literally all of them work. Every single one of them work. They all work. But the question is are you going to go on the journey to get good at it? Because, it's not that hard to fire up somebody else is unmuted here. It's not that hard to, we got them all over the place here. It's not that hard to fire up a computer and start doing some of these things. But there's a difference between doing something, and I actually call it, there's like this thing I talk about sometimes. Oh, no, not that. Let's do it. It's pretty easy to start these things and get something working. Right? That's easy. Anybody can just start a YouTube channel and start posting a video. It's like the easiest thing in the world. Anybody can just start a podcast. It doesn't take but a day and just like a mic. You don't even need a mic. You just need your headphones. You can do it. But there's a big difference between getting something working and going on the journey to mastery. And so that's why I only recommend a few things, because I don't want people to do more things. You can only really do one or two things well. And sometimes you see this, and this applies in every area of business, but marketing is especially important because marketing is really easy to screw up. And so if you try to do all of these, you're not going to do them well. And really, you'd be better off if you had one that you actually understood. And in your situation, you're getting strategy sessions. I think we talked on Monday, was it? And you had 5 strategy sessions for the week coming into the week. Look, you don't need to be doing more than that. Plus, I'm curious to see if you had any others coming through this week, right? So coming into a week, you have 5. You want to have somewhere, I'm guessing, with your numbers, probably between 5 and 8, maybe even less than that. And so don't feel like you need to do more for the sake of doing more. I want to do less, but better. And so instead of doing all of these, I would really recommend people choose one and just do less activities, but do it better than anybody else. And that's where people really get results and consistent results, because they all work. But trying to actually get good at more than one is, oh my gosh, that's hard. So yeah, good question, but I just stick with what you're doing. It's working. All right. Christina says, I have a question, but it's about media, social media blast for tax season. Should I ask it here? Yeah, go for it. Go ahead and unmute yourself whenever you're ready, Christina. Or if you're on the phone, you can do *6. Yeah, if you're on your computer, oh, you can't talk. Okay, good. Yeah, go ahead and ask it in the chat, and then I will go ahead and answer. Yeah, so Logan is saying, I have my first strategy session with a home flipper next week. He's in California and flips about 20 homes a year. I can imagine his biggest need is getting expenses by project as quickly as possible. Questions. How quickly can I promise expenses by job using Bill.com? I never used it. How should I price this? By project doesn't seem fair to price on revenues. So, okay, so the way I would kind of think of it is, and this is the way some people, and not everybody does this the same way, okay? So it's not like there's an ultimate way with these flippers, but let's say that they're doing 15 to 20 projects. And how much are each of these projects going to sell for? Let's say they are 500, or 300K to 800K. Okay. Well, what I've seen people do with this is that typically they'll flip these projects around in a year, and that normal math that we do, which is like $500 a month for every 500,000 in sales. Let's say we use that, right? Which doesn't make sense to use it for this, but I'm just going to show it as an illustration, kind of the way people think about it. That's $300 to $800 per month, okay, that you would charge. But I think for this type of work where it's only going to be going on a portion of the year, the accounting is actually going to be pretty simple. There's not a lot of complexities. And because they've got so many different projects, this is going to be a lot of opportunity for fees. I would probably take that times 50%. Take 50% of that. So I would do anywhere from $150 to $400 a month. And then what I would do is I would say, okay, well, let's say they end up doing 15 projects at an average of 500K. What does that mean? That means that we're going to charge, so that means if we're going to charge per project $250 at that 500K, 250 times 15, that's $4,500 a month. Now that might sound like a lot, but I mean, these guys literally might have 15 different legal entities. Some of them might have 15 different QuickBooks files. Now, not everybody's going to be managing it the same way, so you have to get in there and figure out what's going on. But that's kind of a reasonable range if the company is doing 15 projects a year, right? Because 15 projects a year times 500,000, yeah, that's 7.5 million. Is that right? Did I do the math on that right? 15 times, yeah, 7.5 million. So I mean, I don't know how big these projects are, but that's not outrageous at all. To be managing all that, make sure that all the legal entity docs are set up, all the purchase transactions are there clearly in the file, all of the expenses are clearly mapped to the job, and all the improvements are made, and then when they sell, that's all clearly mapped out, and then they're ready to also, prepare their taxes for that, right? And that it's all clean for all these different entities, and you've constantly got entities coming in and constantly got entities going out. I mean, this is no small task. So it's going to take some work if it's a big company like that. But I think that kind of a pricing arena is really where I'm going to be thinking about it. And the way some people will invoice these types of flippers is they'll literally do it based on entity size and ones that are actively going on. So they'll literally say, well, for every project that's going on that I'm actively managing the file, I'll do this fee. And as those projects are sold, that'll come off the invoice. As a new project comes on, that'll go on the invoice. And so the invoice isn't hourly. It's just fixed based on the number of actual entities you're managing. And it's a good way to do it. And how quickly can you get that going? I have no idea. I mean, I have no idea what they're currently doing. I mean, do they currently have all paper invoices? How are they managing vendors? Are there guys using an app to put information in? I mean, I really don't know. Don't promise them any, don't say something like a year, but don't promise them a week. I mean, just say it'll take us a few weeks and keep it vague. And you just know that you'll be able to get it done. And it depends on obviously you've never done it, so I can't say how long it's going to take for you to get up to speed. Obviously, I don't know where they are in regards to their process. Do they already have all their invoices scanned? Are their guys already inputting, expenses on the job sites? I mean, we'll have to see. But that is going to be a conversation in the diagnosis. We're going to want to figure out the details and get an idea. And then just be vague. Don't promise anything specific and leave yourself open. But the key isn't, look, if you can nail the problem, if that is actually the problem, and that's what they really want, and you don't know exactly what timeline, someone's probably, I don't know if you're on your phone, if you go ahead and mute yourself, I think they did. Yeah, I don't know exactly what the timeline is going to be until I know more information. But if you nail the problem, the price, the timeline, all that crap doesn't matter. Just nail the problem and focus on that. And then if you nail that and you say a few weeks, it'll be fine. And if it ends up being 2 months, that's still a few weeks. That's only 8. Yeah, you don't want to give specific deadlines because you also don't know. There's so many things. Specific things like get you in so much trouble because 1, there's you learning how to do it. 2, there's the current process. 3, there's the responsiveness and like engagement of their staff and commitment to getting this fixed. So there's too many variables to give a specific timeline. I'd be vague. Yeah, Doug says, yes, it's working. But since I'm not bogged down with client work yet, just starting and have a little extra time for now. Do more on LinkedIn. Do even more. The only other thing I would recommend besides LinkedIn, which is really the same as LinkedIn, it's just not on LinkedIn, is direct outreach. So if you're doing LinkedIn and you're connecting with people every week and you're coming into this week with 5+ strategy sessions, which is what you said that you had earlier this week for just this week, then I would do direct outreach. And when I talk about direct outreach, what am I talking about? These are people that you tried to connect with but didn't accept. You go ahead and find their email and email them anyway. You can, and with the direct outreach, you can find their emails typically with Google or Voila Norbert or Hunter.io. Those are services to help you find their email address, voilanorbert.com. The other thing is like industry publications. So like in the staffing industry, who's getting talked about right now? Who are the big wigs? And when you do direct outreach, this is when you want to go for heavy hitters, like big time people. There are some people, like I'm the kind of guy that if I recommend a service, not even to you, not even to everybody that's in next level, but like if I recommend a service to some of my other friends that are business owners that aren't even in next level, I can easily get a service provider like around probably 8 to 10 clients in a week or less. And then if I recommended something to next level, I could get a service provider like 100 clients, right? So I don't really do that, honestly, very much. I've kind of made the mistake of doing it a few times, and it just overwhelmed the person, and then everybody gets bad service. I'm not through next level, just with friends. Like I'll just tell some of my other friends that are business owners, hey, this person's great, and they just end up getting overwhelmed, and then they end up not being great. So, but my point is this. There's people in your industry, Doug, in the staffing industry, that are heavy hitters. They're in publications. They know a lot of people. If you got them as a client, they'd recommend you to 4 other people immediately. And so for direct outreach, you want to find who are people where if I got that person as a client, I'd probably get half a dozen other clients. And so it's very similar process to LinkedIn where we're following up multiple times via email, but we're just shooting them an email that is more specific to them. Hey, I saw this this publication that you're in. Let me actually show you an example of this that I used the other day. Let's see if I can find. I'm going to cover up my screen real quick. Let me see if I can find this email. Yeah, so here's an example. You guys can see my screen again, I think. So here's an example of like a direct outreach where it's more specific. It's not just like, oh, here's like my email that I send to everybody who's got a staffing company, right? It's like, here it is, right? What causes roof leaks? The article was great. And it's like, hi, Tamara. And this was an example I sent to someone who's in the program and in my mastermind because I was like, okay, you can use a direct outreach like this. Hi, Tamara. I came across your profile on LinkedIn. I clicked because I had a leaky roof a few years ago. Total disaster. I saw your post on what caused roof leaks and you nailed it. We had improper drainage ourselves. Love the work you do. I've been working with roofers on accounting and tax for the past few years. Would love to talk and see if I couldn't help you save 15 to 50K on taxes in 2017. Are you free to talk later this week? Here's the thing. With direct, this is why I know it's Thursday right now, 12:25 p.m. I could get 3 roofers on the phone by the end of the day. I could get 3 lawyers on the phone by the end of the day. I could get 3 dentists I could get 3 of anybody on the phone by the end of the day. What you have to do if you absolutely want something is you have to say something that is just so out there. This woman wrote this article, and this is like a real person, this Tamara person. I don't remember her last name, but I was like looking up roofers on LinkedIn. And terrible article, right? No one read it, no comments, no likes. Nobody cares about this article, but this woman's out there trying to promote her business, posting articles about roofing on LinkedIn. And this is the one response. This is the one response that someone ever gave her. I guarantee you. But that is worth a response. And that would get a meeting. And that could get a client. And I don't recommend people do this as their main strategy because it takes a lot of time. But if you have time, this is unbelievably powerful because it shows that you care for a split second and you're going after an ideal client, and they're probably working with some crummy person that doesn't care and just prepares a return, doesn't think about planning, just reconciles transactions, doesn't think about the business, and you'll get the meeting just by showing that you care. And the way you show that you care is just by simply like at least reading their website or at least looking at something about them. That's why I said industry publications, things like that. So if you've got extra time, I would do LinkedIn and direct outreach. I wouldn't mess around with anything else or get complicated. Just keep it simple. 1, how many people have I reached out to this week that could be a potential client? 2, how many people are on the calendar? You've already got those numbers for LinkedIn. Just add the direct outreach and keep going. And just stick to those basic, simple, fundamental things until you're doing at least 8 to 10,000 a month. Don't worry about it, all the other fancy stuff. You don't need it. No problem. Yeah, Don says, do you think your website needs to say that you're an expert in your niche? I'm ready to start, but my website doesn't mention anything about my niche. Don't worry about it at all. I've got people in here that do 100, 150,000 without a website, with a Gmail account, just a Gmail account. They don't even have a company branded, thing. And then, so websites don't get clients. I mean, websites can sometimes lose it, but it's very, very rare. As long as what you're saying is interesting, you've got your LinkedIn, you've also got your website, that's plenty. And Don, I think I've checked out your website and I didn't notice anything crazy about it. I think you're fine. I wouldn't worry too much about it if I can remember correctly. I'm trying to remember visually. I look at so many of these websites, but I can't remember it visually. But I always if someone doesn't have something, I kind of remember it. Yeah, I think yours is fine. I'll go back and look at it today just to double check. But if it doesn't say specific to your niche, that's fine. That's the last thing anybody should do. Branding, logos, names. I mean, you should have seen, Don, you didn't know me last year, okay? But last year, I was doing Next Level Firms, and this business was really, really growing, and I had the worst website. And some people can attest to this. Literally one of the worst websites you've ever seen. But my business was growing because I just focused on meetings and appointments and talking to people and seeing if I could help them. And at the end of the day, what I realized is I used to do all this stuff. I've tried all this crap. Meetings get clients. Websites don't get clients. Blogging doesn't get clients. Tweeting doesn't get clients. Meetings get clients. And if we do something, like if you update your website and it starts to say something about lawyers, the question I have to ask myself is how many meetings am I going to get from that? The answer is 0 directly. So that's why if there's something that I'm going to do for marketing, I'm just going to cut through it. That's why you talk to these people like, yeah, well, we're going to post on social media. It's like, oh, great. What's that going to do? I don't even post on social media hardly. It's like I should do a lot more, but I don't because it doesn't really do anything. I want to go for things that are much more directly going to get on the calendar, get me an appointment, and see if somebody wants to work with me. And so every time you think about doing something as a priority, I'm not saying getting a website and making it focused on your niche is a bad thing. It's a good thing. You should get to it eventually, but I mean, it's definitely not on the list of top 5 things. Yeah, good question though. All right. Yeah, Thompson says, what should I say if I call the lead to set up a time to chat and he requests my resume again? How can we take the focus off that and get the meeting? Well, yeah, so sometimes people ask for the resumes, and Thompson, I saw the email. So Thompson's situation is that she got somebody that messaged her, $30 million company who has a hotel, which isn't huge. It is huge, but it's not like, oh my gosh. Oh yeah, that's right, Jeff. I saw your question above. I'll have to come back to it. 30 million above, 30 million sales, but it's a hotel, so they've got a lot of staff, they've got a lot of physical locations, leases and stuff. So it might not mean that they're making that much profit. It's amazing client, outsourced CFO client. And he did say in the email, oh, we're looking to hire someone. We're not looking for an outsourced person. Send your resume. Never, ever. Nobody in here should ever send a resume. Resumes are for employees, okay? People that, have their business and take clients don't send resumes. I've never, ever heard of someone with a successful practice who sends a resume. I would be shocked I hope most people in here don't even have a resume, I'm sure. And so I would never send a resume. And how do you get the focus off that? You just say, and again, he did say in his email that he wanted to hire someone full-time. So I would just say, yeah, look, I'm more than happy to provide you some more information about my background. I mean, how about we set up a time and I'd be happy to send you something over before we talk. And then what you send him over is just your LinkedIn account. But don't send that except for 3 minutes before the call. What that does, here's the thing you got to remember. People, especially successful people in business, They respect other people with standards. And so when you don't just cave in, like weak business owners cave in. People that don't charge very high cave in, and they just mold around the prospect. But wealthy people, successful people, high-end people, they don't take any shit. And so, yeah, that's not exactly what he wanted, but that's not exactly what you wanted either. So, he's not going to get exactly what he wants, and that's fine. And then that's kind of the attitude you have to have. Like a lot of people I talk to, they're like, oh, like this whole saying, like the customer is king, or people say, well, I just really want to do good by the customers and everything. It's like, yeah, I get that, but you don't have to sacrifice yourself in the meantime. And so you got to have a little bit of an attitude, like it's going to be on your terms. And if it's not a good fit, that's okay. And if the guy ends up weirding out, that's totally fine, because he said, look, he's doing 30 million a year. He said he wants to hire someone, and that very well may be the case, and that's okay. So if it ends up going away, that's fine. Can't be afraid to lose it. Just focus on getting more. I think this was literally the very first person that you connected with, Thompson. Am I right? Like one person connected and then responded with a $30 million company wanting a call. So it's like, just see that opportunity and just focus on more, and just be a little bit aggressive with everybody, because you want your clients to work with you on your terms, not theirs. Everybody wants that. Everybody wants that. For everyone in here, I don't want you to work on your clients' terms. I want your clients to work on your terms. And I'm not saying that to be rude or to be mean, but that it's impossible to have a large business that you enjoy if it's not that way. And there's a way for people to work on your terms and for them to be happy. You don't have to self-sacrifice for your clients to be happy. Not on pricing, not on arrangement, not on on-site versus remote. So it's a mindset change. And what that means, though, is that you're going to have to work with certain types of people that are going to work with your model, and that's fine. I literally just had a call, earlier today with someone where I just said that. I said that exact same thing. I'm like, look, here, if it's not a good fit, that's okay. You have to be able to walk away in your mind. But when you get into problems, when you get bad clients, bad arrangements, low fees, people that take up and just suck the life right out of you and just ask for everything and are so needy and manipulative and late and pay late and don't give you information and stuff like that, those people are always the ones that in the beginning were like gripey and like asking for stuff and like, So just you have to have it in your mind that you can walk away. And so in this guy's situation, I would just brush over it, ask for the call, send him a LinkedIn thing, and if he gets freaked out and he goes away, so be it. I don't want to glob around everybody. The amount of opportunity that's out there right now in the small business market in the United States is unbelievable. It is like just an ocean. And it's like it's like one client is like dropping a stone into the ocean and then saying, I got to fill the ocean with stones, and then I'll have all the clients in my market. It's like, you're never going to do that. There's so many of them. It's unlimited. It really is truly unlimited for anybody that's on this call right now. So yeah, just don't worry about any single one. And I know I'm ranting on this point. We'll get to Jeff's question here in a second, but yeah, just send him set up the call, send him the LinkedIn 3 minutes before, so that way he doesn't have time to look it over, and just get on the call and just crush the diagnosis. Just start burying him in an avalanche of questions like we do in the script. Good question. All right, Jeff. Sorry, I did see your question, and then I got kind of buried in other questions, but you are unmuted, I think. On my side, you can unmute yourself whenever you're ready. Yeah, and if you're on the phone, Jeff, it might be *6.
Hello?
Oh, hey, how's it going?
Okay. How you doing? Yeah. So I have a couple of questions. Number one, I just want you to review with me the coaching situation and what people generally offer and the services for how long. My understanding is that you try and, like the people who maybe have under 500,000 in revenue, maybe can't afford the monthly work and so forth. So you try and get them to do it by, maybe setting them up on QuickBooks and training, maybe reviewing their structure. And I know you kind of like to price it out at something like 2,500 or so. And how long access do you give them for a price like that?
That's a good question. So, I mean, high level, and then we'll get into details on the specific situation, is high level, you want to think about it like, what is the biggest gaping wound right now that they're experiencing? And if I fixed that and only that, would it be worth doing the $2,500 or the $3,500 or whatever it is. Because what I want to try to do is do the bare minimum work for the maximum fee. So I'm not going to try to solve all their problems. I'm just going to try to solve the biggest one at first and then see, well, there are other ones I want to solve too. Maybe there are. So with this client that you're thinking about, what is their story?
I don't have a specific client right now. I'm just trying to understand generalities.
Okay. Well, generally, I want them to be, less than 500,000 a year, because that means that they're probably not going to be a good monthly accounting client. They'll probably be good for business tax. But if they're less than 500,000 a year, and they might not even have a QuickBooks file right now, they might not even have a business bank account. They might be running everything through some personal checking. They might not even have a legal entity set up at all. So what do they need? The key isn't what we're selling them, is what do they need based on where they are. It could be, legal entity formation. It could be QuickBooks setup. It could be that they have a QuickBooks file set up, but they never got trained on it. And so the whole thing is a cluster. And QuickBooks setup, QuickBooks training. It could be QuickBooks cleanup. I mean, it could be a variety of these things. But the key is to just figure out based on their specific situation what they need, and only focus on that. It could be all. It could be one. But any one of these things, alone could be worth the $2,500 or the $3,500. And if that's the case, I just want to try to do a few of them, or if I'm going to do more, then I want to charge more. But yeah, it's going to really depend on where the client is in that situation. And then typically, I mean, look, typically 4 to 6 weeks, I want to try to charge $2,500, and I want to try to meet with them 4 to 5 times. And then at the end, I do want to try to do the annual business tax and individual tax if I want to. You might not want to. This is a good, you might go through the coaching and be like, I don't want to ever talk to this person again. Or you might go through and say, this is great, boom. So it's like, it's a one-time thing, 4 to 6 weeks, just to get that one result for $2,500. Yeah. And, if you meet with somebody 4 to 5 times, it's great, but it's not about how much time you put in. It's just about what they're getting.
I understand. That's good. And the tax planning and the tax preparation would be separate services and separate charges, correct?
Typically, yeah. Typically, I think of the financial coaching as separate from the tax planning. Some people do bleed that together. It depends. If there's something like they just need to get set up, but they're like, for example, someone literally makes $40,000, $50,000 a year profit, they do 100 gross, right? So it's not like there's this amazing tax planning opportunity right now. I might just say, okay, yes, you want to switch to an S corp, but let's just do the training for the $2,500 or the $3,500 and get you set up on QuickBooks, and we're done. I'm not going to make a big stink about tax planning. But if there's a whole, like if we're making 300 net, 400 gross, because we've got this awesome IT company, we're a government contractor, whatever the case may be. And, at that point, I'm going to be thinking, okay, well, I want to do the financial coaching, which includes the QuickBooks setup and the training, so you can manage this ongoing for yourself. That's $2,500, and then we have to do tax planning, because right now, just looking at your numbers, we're going to save at least $20,000 or $30,000 a year, bare minimum. And when I go through the full tax plan, it's probably going to be more than that. So I would break it out if there's an opportunity. It's all about the diagnosis. Like once you kind of go through and figure out exactly what they need, it could end up being three engagements. 1, financial coaching. 2, the tax planning, and those both happen now. And then 3 and 4 is business and individual tax at the end of the year.
Right. Okay, that's good. My second question is, if we're taking over for a client and performing accounts receivable and accounts payable services, I'm just trying to think logically how it works. Like, do you ask them to send your invoices and you kind of pay it for them? How does that typically work as far as taking over their receivables and payables and offering that service?
It depends. Because here's the thing is, are we talking about an e-commerce company with zillions of transactions, or are we talking about a government contractor who has one invoice? So it's not like it can be the same thing for everybody. There's sometimes where people will take the basic bookkeeping, the basic monthly accounting fee, which is that $500 a month for every 500,000 in sales, and they'll take on all the AR and the AP included in that, because everything's on bill.com, it's automated, it's a check the box thing. They're a government contractor with one AR invoice, and they've got a couple of expenses and payroll. It's like there's nothing there. So it's first figuring out what's the extent, like how, and are they currently doing manual invoices? Is everything scanned in? Is everything emailed? What's the process that they're using to run payments? And are their books in order, or do we need to do a cleanup? Because what we can do in that kind of a situation is the way I would kind of like to think about it is, let's say their books are in shambles. I would want to do a cleanup to get them caught up. And as alongside that cleanup, and I might want to do a very small like tech implementation to avoid the cleanup in the future, which might involve Bill.com, that might involve QuickBooks. You know, it depends on the nature of what's going on with the client. But I'm going to do that cleanup, and I want to try to charge. I always for the cleanup want to try to charge at least $2,500 as well. I just don't like to do too many things for less than $2,500. And then you might put in Bill.com. You might have an email where okay, all invoices need to go here. So all invoices go here. Bam! It tries to automatically match it with the bank transactions. And so, yeah, if it's that kind of a thing, then it can make sense, and you don't have to charge that much more. I wouldn't want to take on any sort of manual ARAP. If you are going to take it on, you're going to have to automate it as much as possible. And I also want to, if you're going to take on an AR and AP process that involves any degree of work, I want to charge that as an in addition to the baseline fee. So that $500 a month for every $500,000 in sales, that's the baseline. That does not include any complex ARAP. And if there is going to be ARAP, then I'm going to be adding that as an in addition to that.
Gotcha.
And it's based on complexity. There's not like a hardcore number. I want to be conservative and charge more, but it's not like it's going to be very dependent on the industry and the nature of what they're doing. And lawyers, for example, I mean, look, the problem with them is they have a very specific billing process with WIP and work in process. And then so that's something that typically will be done from an AR perspective with attorneys on site with an admin, because she's got to be so close to the business, knowing what's in process, what's actually billed. So, and they obviously have, and a lot of times those guys have proprietary AR systems to run that practice for practice management.
Right.
So that's kind of, sometimes it's that where it's not going to make sense. And if you're going to get into that, then you've got to learn a new technology and you got to manage it. You got to be close to the business. We're talking about $3,000 a month or something like that, because they probably would have to have a little billing analyst there anyway. And I'm not saying we shouldn't take those on, but if we are, I mean, those kind of things are $2,000 or $3,000 a month, because the reality of it is they need to pay a billing analyst that anyway to do it. But most of the time, I wouldn't recommend getting involved in those kinds of things.
Okay, that's all I was looking for. Thank you for your help.
Absolutely. Yeah, good question. Yeah, Christina, the call-in number, if you go to the audio section and hit phone call, it should give you a number to call. All right. Who else has questions for today? Just go ahead and let me know in the chat. And yeah, I think, there we go. Okay. Yep. Yeah, if anybody else has questions, just let me know in the chat and I will get you unmuted. Or if you have a question you want to ask there, go ahead and ask it. I think I'm going back through. I think I got through the questions thus far. All right, Sandra, you are, let's see here. Sandra, you're unmuted on my side whenever you're ready.
Hello.
Hey, how's it going?
Hi, good. Okay, so I have a call with a current client tomorrow, and he asked me about switching. He's an LLC right now. He's only been in business since last year, about like mid 2016. I did his books for last year. He only made about $20,000, hardly anything. This year, it's a construction company. He has, one large project that's about 600,000, and then he has a couple other smaller projects. On this particular project, he's set to make about 60,000, and he has a couple other projects, like not as large as that one, but somewhere in the $200,000 range, coming in for this year. So he wants to switch his company from an LLC to an S corp. He asked me, kind of he wants to know what my thoughts are on it. And so I'm just trying to figure out what exactly I can offer him. I know obviously switching him to an S corp is a service that I can offer him. But
yeah,
what else?
So you said he did 20,000 last year, but he got a couple of projects. So this year he's going to do 600,000 in sales.
Well, he has this one project he's working on now, which already it's about 600,000. So total probably for this year, probably be anywhere from 800,000 to $1 million in sales.
And what is his net going to be on that?
Right. So his net is probably going to be maybe 100,000.
Okay.
Because his margins are about 12%.
Now, is that after taking a salary for himself?
No, that is before.
Okay. And so I would also look at that a little bit and say, why is it so low? I mean, it should be able to get up to 20, 25%, hopefully. But, sometimes with the construction and whatnot, it really comes down a lot because they've got a lot of costs in there. So that's fine. So yeah, I mean, the way I'm going to think about it is, okay, so 100,000. And if he just takes the 100,000, he's going to have to pay self-employment on that whole 100,000. So then we're going to have to think about switching to an S corp. And so basically the concept is with the tax planning piece is like we want to figure out some amount of how much we're going to be able to save them. So that way when we pitch them the fee, it's like an investment. So we're saving them more than they're paying us. And typically, in the first year, I want the client to get a 3-to-1 ROI on their tax planning investment. Then they also get the savings every year going forward. And it's not always the case, but a lot of times it is, and this is a situation where it is. So we want to figure out, he's doing 100,000. If he switches to an LLC taxes and S corp, how much is he going to save in taxes? That's what we want to calculate first. And so you have to figure out what his reasonable salary is going to be. And then once you do that, you're going to have to look at the portion. Let's say it's, for example, let's say it's $40,000. So 40K is his salary, okay? And then he's going to have 60,000 on top of that. So that 60,000 is not going to be subject to 15% self-employment tax. So what is that, 9,000? 60,000 times 0.15, somewhere roughly around 9,000. So this year and every year going forward, he'll probably save around 90,000 if he had a salary of 40,000. It's rough numbers. You want to go through and calculate this based on what you determine his salary is going to be. So in this year, he's going to save 9K. And that's assuming that's the only thing we do for tax planning, it's just that one thing. And I think it's very reasonable to charge $2,500 to $3,000 for tax planning. Get him to clearly understand that, look, we don't have to do the tax planning. That's fine. I'll just prepare the return. But if you want to reduce the tax liability, I'm going to go through a tax planning process, and I'm going to look at a couple of different things. I'm going to look at your legal entity structure. I'm going to look at your retirement plans. I'm going to look at how you're structuring the business, what expenses you're taking in regards to things like mileage, your house. We're going to go through and look at everything and see what are the opportunities for you to reduce your taxable liability as much as possible. And I know right now, before we're even starting that engagement, I could save you $9,000 this year and every single year going forward. And it's just going to be $2,500 or $3,000. $3,000 I think is great because you'll probably be able to save him more than that. And then that's assuming he only makes the 100. It could go up. So do you see how I'm kind of coming up with that and showing him that it's not like he's paying you like a cost. This is literally an investment, because if he doesn't do this, he's gonna basically pay an extra $9,000.
Yeah.
Not just that, just this year, and then every year going forward.
Right. Okay, so in terms of getting him switched over to an S corp, like what would you charge for doing that?
That's what I'm saying. That's the tax planning.
Oh, okay. Okay, so you're saying the $3,000 to get him switched over and to plan how he can actually save even more than just, just by switching.
Yeah, so the tax planning, that switching him over to the export, so the tax planning, so for some people it's different, right? So some people will do the tax plan and they literally won't do anything. But I think in this kind of a situation where this isn't like like when you only do tax planning, people develop this really complicated process, and sometimes it's too much hooey, honestly. But when you're not just doing tax planning, you're just trying to help this guy minimize taxes. Inside of tax planning is going to be, legal entity structure, life and business structure. Like, should his kids be on the business? Should he have a home office? How should he buy his car? And then also, retirement. Just some of the basic things. And this is why, like, look, what most people don't understand with the tax planning is that like 80% of tax savings come from 20% of tax planning strategies. And so I don't need you to know everything about tax planning. I just need you to know enough to get your client to pay you less than they're going to make. But inside of your tax planning engagement with him is changing the legal entity structure, is reorganizing his life and business, is thinking about retirement.
Okay.
And so, yeah, that's one piece of that. Now, some people will say, oh, Adriel, I normally just charge people $200 to switch them to an S Corp. But it's like, yeah, well, that you're leaving a lot of money on the table. Because if that's all you did and you didn't find anything here and you didn't find anything here, and literally all you did was change it from an LLC to an LLC taxes and S Corp, but it took you an hour and you charged $3,000, everybody wins.
So can you help me with this if I, sell him on this? Like, is there a way that, in terms of finding out exactly how to save him, more than just the $9,000?
Yeah, if you go through week 9, we talk about this stuff a lot. Week 9 through 11 is all about the individual and business tax services, how to deliver them, how to do some of the basics of tax planning. And so when you get through that, you'll have a lot of information there on the basics. Again, we're going to be adding more and more to that over time because I do want to get into more advanced tax planning. But I think in there's some of the basics, and that's all this guy really needs at this point, because this isn't a high net worth individual. I mean, he could be one day, but right now he's doing well, and he just needs some basic things. And I think honestly, if you just did these things, you'd be fine. That's it. Because at the end of the day, all we have to say is, are they going to make more than they're going to pay me? Yes, we did the right thing.
Okay. And then, so yeah, in terms of the engagement letter, so just basically just kind of list those things that are on there that you have up on the screen.
Yeah, I mean, I wouldn't so here's the thing. A lot of people that come through the program, I mean, we do offer engagement letter templates in the program as well. Jeff says he loves the extra modules. So we're beefing it up, baby. So yeah, I mean, look, a lot of people do use engagement letters. I've got people in the program right now that do 500, 600, 750 a year on their practice and don't have a single engagement letter.
Oh, okay. Well, he's a current client. So, I mean, he already trusts me. So, it wouldn't be hard to get him. I think I can pretty much sell him on it, So.
Yeah, I think, I think go for it, and you don't worry too much about the engagement letter. I actually prefer for people to not see the engagement letter until after they've made the decision to work with you and paid, and then you send them the engagement letter to sign it. And if anybody freaks out, then okay, fine, refund them. But they're not going to worry. They're not going to freak out. If they already made the decision, yes, and they already paid, then that's just a formality.
Right. Okay. All right.
I definitely don't want people sending over engagement letters before people pay, and I definitely don't want people sending over engagement letters before people make a decision. That's just ridiculous.
Yeah, no, I wasn't going to do that. I was going to do it, afterwards, after I got the payment. So.
Perfect.
Yeah.
Awesome. Yeah, I think this is a great opportunity, and I think he should go for it. If he's just, the biggest thing he has to see is this.
Right.
He's going to save 9. He's only paying 3, and it's 9 every year.
Mm-hmm. Okay. Thanks, Andrew.
Yeah, absolutely. All right, Candy said, what about firing clients? I got good feedback from the group. What are your thoughts? Yeah, I mean, so I wouldn't fire anybody. Like what I think is like a lot of times people have like a tiff with a client and then they immediately just want to like fire them. And if they're super, super small, that's fine. But if they're a moderately sized client, and then you can also, if they're a moderately sized client and you could potentially bring them up in fees in any way, I think it's worth it to just set up a strategy session and confront them. It's like being the bigger man or woman in the relationship, being the more mature person and saying like, look, this has been great so far. I've loved working with you, but my business has got to a whole nother level and I'd love to continue working this relationship. And here's how I think I'll be able to help you over the next couple of years, over the next year. And here's what I think we should do. And here would be the fee. And if they go away, so be it. But a lot of times what I see is, setting up meetings to try and get them to a minimum of 750, smart. And what you'll find when you do that is you'll have, if you just double your fees 40%, 30 to 40% of people will leave, and you'll end up actually making more money. But you only will be able to do it if you're comfortable if they just leave, because you're just, again, it's just going back to what I was saying before, that you want to work with clients in a way that works for you, not for them. And it has to be both, but it has to work for you principally first, because it's your business. This isn't a charity. I mean, this isn't like we're going out there just for solely working with the clients for their sake, you know? So yeah. So I would try to set up a meetings with those ones to up it. And in regards to the other, and if they're really, really small, don't even set up a meeting, just send an email. Now, in your case, Candy, I think I'd probably set up meetings, because I don't think there's, like you don't have in your situation, because you're doing mostly the accounting, not the tax. Some people have literally like 400 tax clients, lots of them individual. I'm like, I'm not setting up meetings with all those people. Just send an email. Just, or really, if you have a large individual tax practice, you should sell it off. There's someone in the mastermind this last year, Sandra Finch, who sold off a large portion of her, I think almost all of her 1040 work, or at least all the 1040s that weren't attached to the business owner she's working with. And that is smart. Anybody that has that right now should do that. If you've got a large chunk of 1040 work that's not connected to business owners, you should just sell it off. Yeah, and if you do recommend them to someone else, Candy, just, get a commission from that person too. Make sure you disclose that to the client. But yeah, I think don't try to increase the fees if you can, especially if you like them. And even if you don't like them or you don't know them that well, just try. And that way, hopefully you'll keep the same fees, but you'll have half the clients, or more fees than half the clients. That's what everybody I've ever talked. I've never had somebody be like, yeah, I went to increase the fees on my clients and my whole business fell apart. I've never heard that in the thousands of people I've talked to and worked with. So it always ends up good. People are just afraid to pull the trigger. All right, James says, I have a question regarding stating the offer. James, you are unmuted on my side whenever you're ready. And James, if you're calling in on a phone, you might have to do *6 to unmute.
Hello, can you hear me?
Hey, man, how's it going?
Oh, good. How you doing?
Good.
Okay, I had a call yesterday, and it was a nonprofit, and they do about 10 million in revenue. And call was going really well. I identified the issue, but in stating the offer, I think I kind of fumbled it a little bit. I want to see if you can help me go over it.
Yeah. So it was 10 million in sales. What was the reason that they took the call?
They later on I kind of realized it, but they had been without a CFO for 6 months. They're looking at outsource CFO options, mostly for checks and balance oversight, that kind of expertise. They have a current accounting team with a controller. They're happy with them. They get regular reports, cash flow, just all the different financial statements, and they're pretty happy, but they don't have the level of expertise. So through the questions, I was able to identify that. It was in stating the offer and the outcome and results that I kind of I didn't define very well.
When you stated it, how long do you think you spent on it? Like how many minutes?
And that was probably the shortest part of the call. Very, very quickly. I didn't get I didn't formulate it to focus in on the fact that they're, probably saving money on not hiring a CFO, how much, he or she made, 125 plus benefits and a 15% bonus structure. But I didn't concentrate on that at the time. So I got to it, I guess, and I didn't really identify, what they were going to save. So the outcome and result is what I didn't really focus on. So they had a lot of follow-up questions. I handled those pretty well, but I felt that it was a lot more difficult because I didn't state the offer and the outcome and result well.
Yeah, I think the savings versus the full-time CFO is definitely good, but that's kind of like an icing on the cake, because like people, what I've figured out is that like people need to like if they, the price is never really the issue if you're nailing the problem. And so even though this is important, this is related to price, but we also want to have like underlying value. So like they said that they want checks and balances, oversight. Like, so why do they need a CFO? If the controller's giving them the reports they need, what's the need for the CFO?
I guess that's what they're looking into. So just to have that comfort and rely on somebody with the financial background instead of hiring a full-time CFO is what they're looking at.
And what did so that is definitely one piece of it, reducing the emotional anxiety and the uncertainty. And with that CFO, like what are they doing? Like are they like the guy that was there before, the woman that was there before, what was it that they were really taking on and taking charge of? Was it like what part of the business, what problems were they solving or working
on? From what I gathered, it was just bringing that like you said, that certainty, and I reviewed the finances and they're in line, or we need to focus in on this area or not. The other two executives are operationally and leadership focused with not a strong background in focusing on cost areas or identifying those kind of, or seeing oversights or identifying issues in the finances. So that's
the problem is what we're saying here, and this is why this is so important and so key, is it's very, like, we have to balance being specific and being vague, because you have to be specific enough to show that you know what you're talking about and that you understand them, but you have to be vague so they don't think they know everything about what you could do and think they could do it themselves. So the reason why I'm bringing this up is because I think when you're talking, it's too vague. It's not specific enough to their organization and where it is right now and what the challenges really are. It's kind of like if you went to the doctor and the doctor's like, yeah, well, we're going to give you this medicine and it's going to work really well. You're going to swallow it. It's going to go into your body and then it's going to address the problem areas and then you're going to feel better. And it's like, yeah, but you don't even know, like, if I have a sore throat or if my knee is broken. Like, where in the business is the problem? And I think the pitch, and the reason why the pitch might have fallen apart is because the pitch is supposed to work like a puzzle piece, where when you've clearly detailed the issues, specific issues, then the pitch is basically, yeah, I can help with those specific issues. Like, it's very vague, 60 to 90 seconds, and I can definitely help with those specific issues. And you guys will pay a third of what you would pay a full-time CFO, and we'll get this set up where you guys have X, Y, and Z on a monthly basis, so you'll never have to worry about this again. But the problem is, and the first part is the problems. Do we know what the real problems were that warrant what was previously $150,000 or $200,000 a year investment for a full-time person and now might be outsourced? Like, what is it that they're not getting with a controller?
Yeah, I didn't drill down as well as I could have in that area.
That's everything. That right there is the moment. So it's like, some questions I might ask is like, is it fun? Is it related to, so for them, pledges? Like, do they have like pledges and contracts and following up with them? And or is that a problem area? Or is it around tracking expenditures? Because a lot of times people will pledge money for these not-for-profits and it has to be done for a certain thing, and they have to make sure that it's only spent on that specific thing. You know this stuff better than me. I don't have many real experience in nonprofits. I just know vaguely from working with clients. But like, what is the thing that the controller's just wrecking the books, man? He's not thinking about like the higher level, making sure the donors are happy and the project funds are being expended correctly. And maybe that's the problem. I don't know what it is though. But see, that level of specificity is the game changer that allows the pitch to actually solve the problem. Because if we pitch, but we don't fully understand the problems, then we're pitching nothing.
Okay.
Because it seems like with your pitch, and you can tell me, but it seems like the pitch might have been too vague and just wasn't really like something that connected with them for specifically what they needed.
Right, and that's exactly what happened. It was going really well. The questions, you could tell that the CEO was engaged, and we were drilling down. And I thought I focused in on the fact that they didn't have a CFO, and I could provide that outsourced CFO without. So I kind of stopped there.
Yeah. Well, and I think because that's the thing is like it's like fun, it's like one of those things. Going back to the medicine analogy, it's like it's great if I can get a lower cost medication, but I still need that medication to work. Because if I get a lower cost, if I'm like, well, you could get this medication here that's $1,000 and it would save your life, or you could get this medication here for $200, but you might die. So that's why having that underlying understanding of the problem is more important, and it's impossible to pitch without that. So I think the biggest thing is just drilling in more specifically on the business to figure out, yeah, what really is going on. Because it's like they've been operating for 6 months. If they really need a CFO, which they do clearly because they're willing to shell out hundreds of thousands of dollars a year, including benefits and salary and everything, they haven't had one for 6 months. What problems have arisen? It's like if you were supposed to be taking medication for, let's say, a diabetic or something like that was supposed to take medication every single day and they didn't do it for 6 months, what problems would arise now over those 6 months? We want to figure that out right now. So in the last 6 months since this guy left, what balls have been dropped?
Yeah, well, they seem to not have the confidence in the controller at the upper level analysis and that's where I stopped drilling down in that area.
Was the controller on the call?
And according to him, he was. I mean, I'm supposed to get in contact. He's supposed to get in contact with me tomorrow to go over what they have currently and in more detail. I have a follow-up call with him on Monday. But yeah, it was definitely what I could see where we kind of skipped was in defining the value.
Yeah. Well, defining the value, it's all about like a lot of times people think like, oh, this is the difference between getting like selling people and then like getting people to buy. Because if you feel everybody, we all feel like we have to have like a good presentation and like we have to offer people something and tell them about it. And it's like, oh, well, you'll get these reports and we'll do an analysis like this. It's like, actually, it's the complete opposite. If you literally just say like, yeah, I mean, it looks like the biggest problem you guys are having right now is just you're not certain where these pledged funds are going. And while we're getting financials, I mean, we're seeing that a lot of people have been pledging money, but it's going out over time. We don't know drill down specifically who that is. I mean, I don't know what's going on, but it looks like these are the three things we really need to do to get this thing working. And they're like, yeah, James, it's exactly it, and that's what's been falling apart over the last 6 months. And you're like, yeah, I could definitely help you guys with that.
Because the price didn't seem to. I mean, he didn't have any issues at all. And didn't even think about it twice. But it was definitely the objections and a lot of the things that arose after the offer was I could tell that didn't get delivered as well as I would have liked.
Yeah, and I think I would rather have clear problem definition and a pitch that is literally as short as, yeah, I can definitely help you guys with that. And if that was all your pitch, but you actually nailed the problems, you'd be better off than if we didn't fundamentally understand the problems and we tried to give this elaborate pitch. And so, yeah, we want to have a little bit of both. Like you do want to have your pitch a little bit longer than that, but the pitch has to be very tailored to what their problems are. So I think that's the biggest takeaway is just when they say we don't have confidence in the controller, why? What specifically?
Yeah, he said his expertise at higher level analysis and providing guidance and those kind of things.
What type of not-for-profit are they?
They're vocational training, so workforce development.
So when they say and then I would say something like, okay, so yeah, higher level analysis. And are you guys more? Where's the biggest concern at this point? Is it around the donations and the sales of the company? Because I'm guessing people are paying for this too. Or is it around the expense disbursement? Where's the biggest uncertainty at this point?
Yeah, and I asked, how they're, they've looked at the pricing, they haven't done that in 4 years, and those kind of questions that, like I said, it was going very well when I started, drilling in on those areas. It just didn't seem to be the problem that he hadn't told me yet.
Mm-hmm. Yeah, and that's interesting. So the pricing thing, like that's a great example of where that could be the problem. Like the problem could be, look, and maybe you could say, well, what is your guys' pricing? How does it work? Oh, do you guys do financing? No. Okay. Do you guys do payment plans? No. How do you structure, or they do payment plans? Okay. How do you structure the plans over what time period? Have you thought about doing this time period? Okay. I think that might be an area of opportunity. Move on. So it's like you get clear on the pricing, the plans. If they restructured it, if they used financing, how would they be able to help more people grow the organization? And now we're talking about an area of there's a problem that could also lead to making the organization bigger if we solved it. Again, we're just kind of shooting at this vaguely because we need them there to really get it. But do you see how I'm digging in specifically to figure out what's going on and what could change to make transformation?
No, I do.
But so you do have a follow-up call with the controller?
I have a follow-up call with the controller tomorrow, and then a follow-up call with the CEO on Monday.
Perfect. Okay, good. So you at least got that. That's good. Yeah, well, and now you've got the opportunity with the controller where I would use this exact same conversation we're having right now to drill down on them and drill down on what are the biggest challenges in the organization? What does he focus on every month? That's an ongoing pain point. Just drill in on him. And that way, when you go back for the final call, you kind of got a little bit more data from the controller. And you can take the first few minutes of that last call and say, hey, I talked a little bit with Billy, the controller, and I wanted to ask you a couple more questions about this. And then, bam, you can still give yourself a chance to go even deeper. But I honestly think if they're having you meet with a controller and they're meeting with you again, you'll probably close it anyway. But I think give yourself a better chance by just going deeper with both of them.
Okay, will do. Appreciate it.
Absolutely, man. Cool. Keep me posted.
I will.
Yeah, Danielle says, I have a follow-up question to Sandra's question. Does the tax planning include compliance? No. So there's a difference between compliance and planning. And I wrote a really good email about this, which I don't think anybody in here got, that I sent out to the email list earlier this week. But there's a difference between compliance and planning, okay? Compliance is just preparation. So here's the thing. The general public believes that, this is kind of funny, and I didn't always fully understand this, but the general public believes they're the same, planning and preparation. But they're not. They're not at all. Most people, even experienced CPAs that have a practice, who've been doing it for 10, 15 years, most of them are just doing preparation. And if they do, quote, planning, they might be changing one thing and they're not even charging separately for that. They're just doing it alongside the return. But most are doing no planning. They're just doing preparation. And the reason that they're not doing planning is because they don't know how to break that out separately, figure out exactly how much they're going to be able to save and charge. And if they did that, they would totally do it. But I don't know what it is. They just don't. And so the planning and the preparation are two separate engagements. The planning is specifically related to reorganizing the business and the life to reduce the taxable liability. The preparation is preparing the returns and filing them with the IRS. Two different engagements, two different fees. Really three different fees if you're doing the business and the individual. So yeah, great question. I think Christina said she had to run, but she did have some questions. Yeah, but you might die. That was a good one, yeah. Telma says, I don't do audit, but if I'm asked for one, how do I decline without being looked at as not capable? Well, take the call. I would take the call and kind of still do a diagnosis and see if they've got an audit going on. Well, they might need audit prep. They might need cleanup. So I would definitely have a conversation with them and see. And then also kick the tires on the tax side too. So I would still set up the consultation and say, and then you can also, if you don't want to do it, you can refer someone. But yeah, if there's an audit going on, there's a lot of other services around audit that, especially if it's a first time, that need to be done. Does anybody else have any questions for today? Just let me know in the chat and I will get you unmuted. Yeah, Candy, what about sales tax? Yeah, go for it. Go ahead and unmute yourself.
Hello,
Hey, how's it going?
can you hear me? Hey, Andrew,
Yes.
how are you?
Good.
So I get these requests to do sales tax, which I don't love. Is that something you suggest? I mean, I just want to get out of it because I used to like it, but I don't anymore. But I don't know if other people are offering that service for processing sales tax across the United States. It's a big job if you're not using software.
Yeah. From a
What are your thoughts
pricing
on it?
from a pricing perspective, I think about it the same way that I was talking about earlier with Jeff around like AR and AP. It's like if it's super simple and it's like 1 or 2 states or something like that, because of some weird situation, I might not even charge more for that. I might just include that in the monthly accounting fee. But if we're talking about like a multi-state, 40-state operation or something like that, it's a whole separate engagement. And you have to kind of scope that out separately and charge that as an in addition to the basic accounting fees.
I just called a local firm to see if they would like to take my client on because I didn't want to do it anymore. And they said it would probably be about $2,000 a month. Maybe they could get it to $1,500 a month.
And what do you charge them right now?
And $275 for it plus bookkeeping.
So
They're going. I already told them they're out.
But Candy, here's the problem is, this is exactly what I was saying before. I think the reason you don't like some of the clients isn't because you don't like sales tax, it's because you don't like losing money.
Yeah. Yeah, this is a whole other drawn out one. I had given it to one of my staff who's no longer here, and they filed half of the sales tax wrong. So now I'm fighting agencies on either overpayments, we're trying to get refunds for this client, or they paid late and I have to eat the late fees because that's part of my deal.
Well,
So
but that's because that's also because the fees were too low. You couldn't spend any time on it, probably, and it's rushed, right?
Yeah.
That's the thing, though, is I would just say, look, here's the thing. I mean, I would love to keep working with you guys. And honestly, I went to see if I could give you guys off to somebody else. And honestly, they quoted me 2,500. And so I'd be happy to keep you guys for 2,500. But if not, that's totally okay, and we can go our separate ways.
Ah, interesting. Okay.
Because if you did it for 2,500, would you be happy?
Yeah.
Well, there you go. So the problem isn't the clients. The problem isn't the clients. It's how much money you're asking for.
Right. Yeah, that's a good point.
So there's like, we want to be careful when you're just firing clients, but like, it's really us.
Yeah. I mean, there's clients I love that I hate getting rid of just because I love them as people. And there's other clients that I could so live without ever talking to them again. And this is one I'm kind of on the fence about. I would do it for the money, but there's no real love for this client. We just haven't built that kind of relationship that I have with other clients.
Yeah. I mean, I would say that, like, this is a perfect example. And look at every single client in this exact same way. Say, if I were to quote this out to somebody else who actually who actually had a practice where they were doing all the pricing like this, how much would they charge? In this case, it's $3,000 a month. Okay. If I charge this client $3,000 a month, but I still want to work with them, yes, make them an offer.
Yeah. Okay. Interesting. I'll definitely take that.
I think your book could probably double just from doing that.
I am so sure you are right about that.
So let's do that. Don't fire everybody.
With clients.
Don't fire them. Don't fire them. Just 5x the prices when you can.
Yeah, and I do think I'm going to get a bunch that will agree.
I know.
And the ones that can't are just really, they're just little guys. But I did find another firm like that's starting out that I trust and does good work that said they would take them. So I'll move them.
And if anybody asks, look, you can be honest with them. And, you know, because people like that sort of authenticity. And you can just say, look, here's the thing. I recently found out, and I went and I've been researching this a lot, what everybody else charges. And I know you guys got a great deal, and I've loved working with you, but I just realized that my business will never grow unless I restructure my fees, and I'm way out of line with what most people do. And so I have to restructure this. Look, that's not your guys' fault. I'd love to keep working with you. I think we have a great relationship. This has been awesome, but it is going to be $2,500 a month going forward.
Yeah. And I think actually some of the ones I'm losing for the monthly will sign up for boot camp.
Good. Oh, yeah, the small ones. Makes sense.
Yeah, I think they'll do that instead. So I think I'll be able to salvage some of it.
Makes sense.
Well, thank you.
No, absolutely.
All right, I'm going to hop off.
Cool, I'll mute you. All right. Yeah, Karen says she processes sales tax too, Karen Allen. So Candy, you might want to connect with her if they do end up wanting to go with somebody else. And Whitney says, can't talk. I just want to say thanks, Andrew. I have 3 strategy sessions this upcoming week. Love it. Let's get 3 more. Good job. Yeah, what you find is like with the strategy sessions, are we reaching out to people? Yes. Okay. We'll get meetings. Sandra says, what tax software do you recommend using? Drake? And you'll see that in weeks 9 through 11. We go through Drake in detail. Now, other people use different stuff. That's totally fine. I just wanted to provide something for people. Like, there's a lot of people that come through Next Level who have always done, accounting for a large corporation, but never done tax. Or they've done accounting for small businesses and bookkeeping, but they've never done tax. And so I wanted to give people a from the ground up option to go through, and we've done that with Drake. But if you don't want to use Drake, you want to use something else, that's great. There's nothing fancy. Software and tools don't matter. Business, this stuff that we're talking about right here, pricing, sales, talking to people, asking them for money, defining value, getting paid, this is what matters. The tools we use, most of it's a distraction, honestly. But yeah, we do have the entire process for Drake in the program. Does anybody else have any questions for today? Happy to stick around another 30 minutes or so. If you have any questions, just let me know in the chat. Yeah, good question. Danielle asks, what are my feelings around Thumbtack, Upwork, and Craigslist? So, look, the thing is that I don't think they're bad. It's just that typically what's on there are lower end price focused clients. That's just typically it. Do I feel quality clients can come from there? They can. They definitely can. But you're not going to get a niche focus for the most part. You're going to get local clients that are typically price focused, lots of individuals and startups. That's typically why. I mean, a lot of people have used them or have experience with them. I'm not totally opposed to it. I'm not going to tell you to shut anything down. You guys can do whatever you want. But I think, yeah, it's like you want to be more intentional about the exact type of client that you want and go after them rather than taking whoever's on Craigslist. Because, yeah, I just think about it. There was a friend of mine when I was in college, and him and I, like whenever we would go out with other friends or whatever, that I don't know what the occasion was, but he used this so many times, and he would say, "So somebody would ask, like, so how did you guys meet?" Like me and this other guy. It was like we were going out dating girls or whatever, and he would always say, "Oh yeah, we met on Craigslist." It's just like, what? Why would he always say that? But it was kind of a joke. But the reason it was kind of a joke is because like meeting anybody on Craigslist is like kind of weird, And I think most of the people that get clients on Craigslist have really weird negative experiences, but there are some great clients on there, surprisingly. But it's kind of one of those things. It's like, Thumbtack, Craigslist, it's just in general, it's lower end clients. And yeah, so that's kind of the way I think about it. All right, Sandra, you are up whenever you're ready. Yeah, Danielle says, okay, good. I see they're very fickle. It's true. It's not the best. Sandra's having an issue with audio. We'll go to Whitney, and then Sandra, see if you can get that situated. You might have to log out, log back in. Whitney, whenever you're ready, you can unmute yourself.
Hey, Andrew, can you hear me?
Hey, how's it going?
Hey, it's going good. Sorry about the first question. I'm actually in the car, and there was a lot of noise. But my question goes back to the other day when I was speaking with you about the nonprofit that was that's the startup nonprofit. So I've been researching the 501c3, But when he spoke with me, he's basically looking for, you know, an outsourced CFO. He doesn't want to handle any of the accounting at all. Is this something that I should basically look at doing and being the outsource? Do you recommend doing this? Or I know you said charging no less than $1,000 a month, but being that he doesn't want to do any of the financial part of it at all, he wants someone to do all of it. What is I guess, what do you think about that? Or
So you said
what should I start out as?
You said he's just getting started?
Yeah, he's just getting started. He has to he needs to apply for the 501c3, like you said. So he needs me to do that for him. Basically, they're getting started with everything. They're going to be using grants, so they're, you know, getting grants from the government. I'm guessing he's coming tomorrow with all of the information as well. But I'm just trying to figure out where I should have my head as far as where I need to start as far as pricing.
How much are they gonna make on the, like, in terms of total receipts or in terms of donations this year?
I don't know.
Does he have any indication? Are we talking like $5,000 or like $500,000?
I don't know. I can find that info. I will find that out. I will ask them.
Either way, I mean, look, these people, it's so funny when people do this. They're like, I want to start a business and I don't want to do any of my own accounting. It's like, all right, well, and I want to start a business and I don't want to have to think about anything legally. And I want to start a business and I don't want to have to do anything related to sales. And I want to start a business and I don't want to, it's like just terrible attitude. But that being said, he could be a very nice guy and he could be very successful. And so, yeah, I mean, I would help him get set up with a 501c3, charge him for that, maybe $2,500. And then I would charge him $500 a month. I mean, I always say nothing less than $500 a month. I want to go for $1,000 plus, but I definitely don't want to do anything less than $500 a month because it's hard to even take a call and then have to do any work for $500 a month. So, yeah, you know, or answer a couple emails. It's just not very much to work with there. So, I mean, yeah, I'll manage all the accounting for $500 a month to start, and then I want to also be able to reassess in the next 3 to 6 months.
Okay.
But he's not going to want to do that because he doesn't have any money, and this isn't a real organization yet. Now, I could be wrong. Okay. This guy could be serious. This thing could be like $2 million in the first year. He's really connected, knows a lot of people. Okay, good. That's great. Then we'll eventually get this as an outsourced CFO. We'll charge $2-3 a month. 6 months from now, that'll be great. But right now, today, if he literally doesn't want to do anything, it's going to be $2,500 for the 501c3, and with that, we'll do $500 a month to get him set up on QuickBooks and start getting things going for the short run.
Okay.
But I wouldn't do anything less than that. He'll probably want to pay like $150 or whatever. I'd be like, that's great, but you know, it just doesn't make sense. You can't. So Whitney, when you're in a situation where you're just getting started, and you'll see this more and more as you get to know more people in the program and in the community and other people that you learn who are practice owners. When people start, what they do in the beginning is they just take whatever they can get, and they're like, oh, this guy's starting thing, he's $150 a month, and then they get like 4 clients like that, and they're like, oh my gosh, I got 4 clients, it's like $600 a month, but I have like a full-time schedule. You know, right. Because there are these clients that are low end, they're just getting started, they're real needy, they have a lot of questions, they want to hang out with you. And so I think as long as he's willing to pay $500 a month, I think it's worth, you know, working with him. But if he's not, that's fine. And he doesn't want to do it himself, and so he needs to move on. But we can still help him with the 501c3, and 1 client for $2,500 for the year is great.
Right, but I just figure that even, I mean, 500 is good, but I was even thinking of, you know, saying the 1,000 a month, but I'll go with it 500 as you say. But when you think about it that way, it's actually better for him because he doesn't have to go hire an accountant on his staff and pay them the $40,000 to $50,000 a year at the time. So yeah, that's how I look at it. But
the reason why I say
that the wrong way.
Yeah, well, the reason why I say the 500 is simply because, you know, in business, things generally take a little bit of time, and they take generally twice as much money as you thought they would. Not always, but like, especially with somebody like this kind of an attitude who doesn't want to do anything for himself. He just wants to hire other people to do it, and he wants to have other people take care of critical tasks. Like one of the most critical tasks is like getting a 501c3. So I don't want to do it anything. Somebody else just do it. It's like, okay. Well, when people have that kind of attitude, it's going to take them more time to get things done because they're not taking control of it themselves. It's also going to cost them more money because they want to hire other people to do it. So my thing is I don't know how long it's going to take for this guy to be successful, but it doesn't look like it's going to be a short path. And he's not going to be able to afford $1,000 a month for very many months without having anything else going on. But $500 a month, it's a lot easier. And as long as you say that you want to be able to reassess in 60 to 90 days, then you could easily increase it to $2,000, $3,000 a month if this guy just starts going crazy on it.
Okay.
Now, if he comes to you and he says, I've got everybody lined up, we're going to do 2 million in sales this year, it's a different story. Or 2 million in receipts, it's a different story. But I don't think that's the case.
Okay. Okay. Thank you.
Absolutely. Good question. All right, and Sandra, you are unmuted whenever you're ready. Go for it.
Okay. Hi. So I had before I started this program, I was working on going to start holding like QuickBooks training seminars, kind of like a entry level type of training. And just wanted to kind of get your thoughts on it. I was thinking about doing like a 6 to 8 person like class just to kind of reach out to customers or potential clients and also make some additional revenue like on a monthly basis.
Yeah, so
typically, just kind of want to get your thoughts on that.
Yeah, and you'll see this a little bit in the bonus section here where I talk a little bit about like the financial coaching and kind of how that works, and I talk about it. What I would say is instead of creating like a class and making it like a big class thing, just get one person and do it for them first. And just do it remote and manage it with them. And once you get one, then get two, then get three, and then start like a little group. But I wouldn't worry too much about making it anything super formal in the beginning. Just get someone to commit to working with you and go through it. And I even show you in here in how to craft it and outline it, like exactly how it should be outlined. So yeah, I mean, I think it's great to do. And as I was mentioning earlier to Jeff, typically we want to work with these kind of people when their company's doing less than $500,000 a year. So do you have a lot of people in your network right now that are business owners doing less than $500,000 a year that you know already?
Yes.
How many if we put them down on a piece of paper right now?
Less than 500,000, I would probably say, well, maybe, I don't know if this is a lot, but maybe like 20, 25.
Perfect. So let's set up 20 to 25 strategy sessions, and let's do 3 to 5 of those a week for the next month, in addition to the other larger business owners we're trying to go after. And yeah, I would just try to get clients from that. But I wouldn't worry about making it like a live event or anything like that. When you see that training on it, it's good to start with one person and work with them and get a little bit of experience and make it better with the second person, better with the third, better with the fourth. But yeah, I think it's great. It's especially great for the smaller ones because you wouldn't be able to work with them anyway, other than on the tax side, because doing the monthly accounting for someone doing $300,000 a year just doesn't make sense.
Right. And this would be something you would charge $2,500 for that, like you said here, 4 to 6 weeks, $2,500 minimum.
Exactly, and I walk through all that in here actually, like what you should charge, how you should structure the program, how you should outline it. Yeah, all the software you need to kind of deliver it. So yeah, that's all in here.
Okay, perfect. I'll check that out. Thank you.
Absolutely. Does anybody else have any questions for today? Just let me know in the chat. Let me know in the chat, and I'll get you unmuted. Or if you just want to type a question in there, I'll do my best to answer it. Does anybody else have any other questions for today? Christine, I'm not sure if you're still on. I see that you're on here. I know you had a question earlier. All right, well, I'm happy to stick around for another 20 minutes if people still have questions. Yeah, I'll just do a last, okay, here we go. Karen says, what is your opinion on charging per store for a company or charge overall? Yeah, is this for a restaurant or for a retail shop? Restaurant. I mean, I'm gonna use, and you'll see this more, Karen, I know you just joined. You'll see this more in week 2 when we talk about pricing. I'm gonna probably look at it on a per store basis. Yeah, I mean, it's gonna end up being very close to the same if I were to look at it either way, because typically what I wanna do is charge based on the size of the company in terms of sales. Typically we wanna try to do $500 a month for every 500,000 in sales. Sometimes for restaurants, they want to do less than that because restaurants tend to not be as profitable as like a service business. But restaurants actually have more complexity, things around, some of them have inventory accounting. So we end up actually wanting to charge a little bit more than that, even though they might want to pay a little bit less. And so we have to get real clear on the value going in, what the problems are. But yeah, $500 a month for every $500,000 in sales. If you break that down by location or in total, it's going to be about the same, unless they're doing like merchandise or something like that. But yeah, that would be kind of what I would want to hit as a guideline. And you'll see a little bit more about that in week 2. Yeah, Danielle says, your guidance on pricing, is that good for all industries or are there better methods for pricing? So that guidance is good for most industries. And even if it's not, so here's the way you got to think of it. So 500,000 in sales, let's just use the million in sales to make this easy. $1 million in sales, right? Under this, it would be like 1,000 a month. Now I'm using that typically thinking about a service company. Now I want to get the same if it's a restaurant or if it's a manufacturing company. But when you're going after those other companies, what you have to realize is that a lot of times a product company, be it e-commerce or manufacturing or restaurants, they're going to have other costs that a service company wouldn't have. And so they're going to have less funds available to cover operating expenses. But the problem is, this is the typical calculation for service companies, $500 a month for every 500K sales. Okay. Now, but the problem is when you get into things like manufacturing, restaurants, e-commerce, other kinds of business models like this that have product cost or other costs, they have less profit or less margin to cover OpEx. So they want to pay less for accounting, but they generally have more complex accounting processes. And so you can actually get higher fees for these companies, and you should try to get higher fees for these. It really depends on where your role starts and ends. If they've got someone handling all the inventory, if they've got someone handling all the job costing, and you're just doing the accounting, okay, I'm fine with this. But if you're going to get into any of these areas which are in accounting, but are going to be more complicated, then I actually want the fees to be even higher. But I want you to come at it from an understanding that they might not want to pay this. And so it's your job to figure out even deeper, what are the problems if we change it? How is this going to change the business? Like, how much spoilage is going to be reduced if we are able to track inventory? Like, if we actually, like, how is that going to change purchasing and reduce spoilage? How, like, everybody's been to a restaurant where you go there and, like, for some reason every darn time something's not on the menu because there's an inventory shortage. So they're not able to sell certain products because there's inventory shortages. And there's some restaurants that are like that, right? We've all probably had that experience. And so how much are they missing out on sales by not managing inventory? So if you started managing inventory and giving them a detailed report of it so they knew when to purchase things, how much spoilage would go down and how much would sales increase? And get them to come up with that. Get them to tell you that and admit that to you. But you have to get really, really specific because they have less margin to cover OpEx, which is fine because they have more problems. And the bigger the problems, higher the fees. This company I was talking about making 3.5 million last year, what would you charge? I would be thinking immediately in the $3,500 a month range, $3,000 to $4,000 a month range, plus, depending on what we're taking over. Are we just doing the monthly bookkeeping? Are we just preparing the monthly financial reports? Are we doing inventory? Are we doing AP? Are we doing AR? It's probably not going to be too complicated of an AR process if they just got the tickers there, but you never know. Are they doing catering, right? I mean, like, what's the, I need to know more. Bookkeeping, AP, payroll. I'm going to be thinking in the $3,000 to $4,000 a month range immediately. But I'm not going to. That's like my guideline. I'm going to do that exact calculation. $3,600 a month is what I'm thinking of. But that's my baseline based on, and you know what, I probably would tell them that you're coming up with that based on a location, so in case they do add another location, your fees go up. But what I'm going to think about is that's my initial guideline, and then I'm going to go in and do my full diagnosis and think about what else is going on. With AP, I might end up doing a little bit more. What's the AP process like? Is it automated? Are they going to be sending invoices to my place and they're cutting checks? Am I going to have to do that? Like, or is this all automated in Bill.com? How much more above that 3,000 to 4,000 am I going to have to go? And then on the payroll side, how is that situated right now? You know, how often are they running payroll? Is this a monthly thing, a weekly thing, bi-weekly? How many people? Are you also cutting checks for contractors? Like, yeah. So but that is the guide, that is the baseline, Karen, that I'm gonna be starting to think about. And then if there's other complexity on top of that, I'm gonna start thinking about increasing it. Weekly with all the HR work. See, this is coming into like a big engagement, which is good. That's real good. I mean, but look, they're wanting you to do all the HR work. They're wanting you to do all the payroll. And how many people are there, right? Probably quite a few. You got 4 locations. We got people there. We got workers in the back. We got managers, you know, maitre d's or whatever. This could be 10 per store, 6 stores. So 60 team members, all the HR work, which by the way, isn't just what it is right now. They're going to be hiring and firing people. It's a very volatile industry. And then you have AP. How complicated is that? We got 10 stores. My guess is some of the AP with food has to be paid in 7 days. So you might have to have a weekly AP process. All of a sudden, this could be a $6,000 to $7,000 a month engagement. That's still going to be cheaper than if they had to hire a full-time HR manager. AP's mostly automated. Okay, that's good. And so full-time, this is like, yeah, for you, if it ends up being $6,000 a month, that's better than if they had to hire an HR person, an AP person, and an accountant. That would easily be $15,000 a month. And having 60 team members and constantly needing to hire, it's not unreasonable to have an HR manager. I know people with companies half that size that have an HR manager. So, you know, I'm thinking immediately, I mean, I would not take this for less than $3,600 a month. No way, I'd jump off a cliff before that. But then on top of that, I'm going to try to get it closer to 6 to 7, depending on how much I can. And how do you do that? You have to drill in on them and really see what are the problems and what is it really going to, like, what have they been doing? How long have they not had this? What's fallen apart? How's the business fallen apart? Or whoever's been doing it right now, what are they not getting? What are they going to get with you that's going to be different? And really also go into specifically, make them admit to you, make them explain to you how many people are they onboarding every month with the HR process? How many people are getting fired on average? Last year, how many people were fired and how many people were hired in 2016? Right, so get them to admit the nature and the complexity of all these things and the problems they've had with it. In their words, not yours. And again, I know, Karen, you're new. You'll see some of this stuff in week 2 as well, how we guide these conversations, but this could be an amazing client. It's just, there is going to be work there, so I want to make sure we're getting as high a fee as possible. Yeah, Danielle says, yeah, there's a lot of people in the program that work with manufacturing. She says she's more familiar with standard costing and variance analysis, not job costing. I enjoy it, but it can be time consuming. What's your experience? Yeah, I mean, I think standard costing really just doesn't make any sense. It's like, it doesn't mean anything. It's like standard costing is literally just, we don't have the information to do proper costing. So we just make something up and then we do the variance. So it's silly. It's literally a technological limitation. So if you can do job costing down to the dollar and the cent, that's better because it's actually right. It actually means something. Standard costing doesn't mean anything. So if you can do it, it's better. But if you can't, that's fine too. I mean, if they've got, sometimes the physical nature of their production process won't allow for dollar, like down to the last penny job costing. And it has to be standard, which is, it's not going to be a you problem. That's going to be more like an engineering problem based on the type of organization, the products they're selling, the technology they're using to actually produce whatever it is that the widgets that they're making. So it's not like you just have to deal with the problem as it comes up. You can get paid for either standard or, actual dollar job costing. Both will work. Anybody else have any questions? Just let me know in the chat. Good ones. Well, I'll go ahead and do a last call on questions. If anybody has any questions, just let me know in the chat. All right. Well, I'm going to go ahead and wrap this call up, and I will post the recording in the group later on today. If anybody has any questions in the meantime, do not hesitate to reach out to me. Great call, everybody. Awesome questions. The better the questions, the better the calls. So I do appreciate it. And yeah, I will talk to you all soon.